What's going on, everybody? Welcome back to another video. Hope you're doing well, feeling great, and enjoying freedom. It's a great day to have a great day. Today, I want to talk about what it would mean or what it would look like to see a 50% market crash, going to sleep one night and waking up the next morning to your net worth being chopped in half. Are you prepared? We're going to talk about it. We're going to get into it, but really quick, just in case you're new, make sure to subscribe for a bunch of videos. Subscribe to my second channel, which is my backup channel for exclusive bonus content. Get yourself some DYDSS merchandise to help support the channel. Try out some G Fuel Energy Formula, $5 off your first order by clicking the link in the description. And of course, make sure to go and get your up to 12 free fractional shares by downloading Webull and funding your account any amount. And promo going on right now, all you got to do is refer 3 friends to the app, tell 3 people that you know, and you are guaranteed to win anywhere between $300 and $3,000 worth of free Apple stock. Webull link in the description. Everything is linked in the description. All right, so let's talk about a 50% market crash. And as always, my video is going to be something to listen to rather than something to watch. Treat it like a radio show, treat it like a podcast. All right, so fumbling stuff all over the place. Not fumbling the bag though. Okay, so a 50% crash. Whatever it is that you're working on, whether it be real estate, imagine a massive housing market crash. Or if you're in the stock market, imagine the S&P 500 takes a 50% hit. Or maybe you're stacking the silver, maybe you're stacking the gold, and all of a sudden silver gets pounded down to $11, $12, $13 an ounce. Gold gets pounded down to, I don't know, maybe $600 or $700 or $800 an ounce. Imagine that happened in the blink of an eye. A 50% or a near 50% crash. Full-on tanking of whatever it is that you're working on, or maybe all of the things that you're working on. Building something up for yourself. I'm not necessarily talking about your income being chopped in half. I'm talking about your net worth. Your on-paper worth. The valuation of the assets that you own. 50% chop. Now, right now, you're thinking one of two things, I would assume. Number one, that sounds horrifying. And if there's not a small part of you that can acknowledge that that's horrifying, you're being dishonest. But just because it's horrifying doesn't mean that you're not confident that you can weather that storm. You have to admit that that's a terrifying thing to hypothetically experience. You can either think, oh, that's horrifying, I wouldn't be able to handle it, or that's horrifying, I will be able to handle it. So that's the first thing that you could be thinking of, how scary that sounds. The second thing could be, I hope we do see a bit of a crash. Preferably a short-lived crash. Give me an opportunity to buy more. Okay, everything's half price. Everything's on sale. Fantastic. That way, when the market goes back up, I will have gotten a whole bunch of more stocks, or I would have invested more in real estate, or I would have gotten more coins, or whatever. Half price or close to half price, and now the market's back up. I was able to get a whole bunch more for a cheaper price tag. Well, depending on the asset class of choice, it could work in your favor, or maybe it won't work in your favor. We learned during the crash of 2020, which, by the way, I hate referencing. Every time I say the words, the crash of 2020, I want to pound my head on the wall. Friggin' hate talking about it. We know. But anyway, we learned during the crash of 2020 that, for example, if the spot price of silver and gold take a massive hit, whether it be a 50% drop or a 25% drop or something rapid, quick fall of price, premiums go up, which kind of level everything out. If spot price was $20 without much of a premium at all, and in the blink of an eye falls down to $10, and all of a sudden they tack on a $10, $15 premium, then you're kind of in the same boat, even though spot price is down. Oh, hey, 50% sale. Oh, premiums have quadrupled. Therefore, it's, you know, everything's kind of still even. Massive price drop, but no discount for you. Stock market, on the other hand, no real premiums attached to the price of a share. Housing market, that's a little bit different. Now, I'm personally not involved in real estate. I would love to be one day, but at the moment I am not, nor have I ever been. So I don't exactly know how easy it would be, because it's a little bit more time consuming to buy real estate than it is to buy coins or stocks or whatever. There's a whole process involved. It's not just like with a click of a button, oh, okay, that apartment building's mine, or that small single family home is mine. Oh, want it? Boom. Okay, now it's mine. There's a process. But whatever it is that you're working on, whether it be a stock portfolio, whether it be precious metals, whether it be real estate, or whatever, imagine whatever it is that you currently own, and are currently in the process of acquiring more of and building something up for yourself. Imagine all the work that you put in, all the time that you put in, everything that you did, the progress that you've made. Boom, cut in half. Would you or would you not be able to handle that? That's an honest question. There's no right or wrong answer. Some of us would be able to handle that. Some of us would not be able to handle that. And 50%, that's just a hypothetical number that I'm using. Nice solid number. Could be 20%, could be whatever. Would you be able to handle a massive crash that temporarily wipes out your on paper net worth? Would you be able to handle your $30,000 stack of silver all of a sudden only being worth $15,000? Would you be able to handle your $100,000 stock portfolio falling all the way down to 50K? Would you be able to handle all of the real estate, or even if it's just one property, completely collapsing in price? Would you be able to handle that? Some people will say yes, some people will say no. Some people will say yes or no and be lying. Some people will say yes or no and be telling the truth. It is what it is. But a lot of people are investing, a lot of people are stacking, a lot of people are building something up for themselves, and not mentally preparing themselves for a pullback or a correction or a full-on crash. There are a lot of people that they're walking around all the confidence in the world during a bull market, but then all of a sudden we see a red day that followed a red day, which followed a red day, which followed a red day, and now all of a sudden everything across the board is down. Oh my God. Didn't expect to see this guy. Hey buddy, I'll see you in November. So when it comes to building something up for yourself, when it comes to beefing up your net worth, oftentimes beefing up your net worth comes along with increasing your income, but they don't go hand in hand necessarily. One does not automatically equate to the other, because there are two ways you can go about doing this, and there can also be a little bit of an overlap. A lot of people are either focused on increasing their income or increasing their net worth. Now, yes, one can lead to the other and vice versa, but in this video, I'm talking about net worth. I'm not talking about a 50% pay cut. I'm not talking about your income falling. That's not what I'm talking about here. I'm talking about your on-paper net worth, where your life doesn't necessarily change, or really shouldn't change in any way, if the on-paper number goes up or down. Because think about it. Imagine you woke up one day and there was a 50% jump. Everything's up 50%. Everything, your whole net worth, boom, out of nowhere, taken off through the ceiling, skyrocketing. But your plan is just to keep on buying, and your plan is just to keep on building, and even if the prices go up, you don't plan on selling. You still have a long way to go, and you're not interested in parting ways with anything, even during high prices. Does your life change? No, it could be cool to see. Be like, wow, look at the numbers going up. But does your life change? Not really. Well, the opposite is true as well. If the on-paper price goes down, your income remains the same, your life remains the same, everything remains the same. The only difference is what the number reads, your on-paper net worth. What the spot price says on Kitco, whether it's up or down, moving sideways, doubled, cut in half, nothing changes if your plan is to hold on to the silver and gold that you own. Your position with the S&P 500, nothing changes. If we're up, down, in the red, in the green, in the purple, it doesn't matter. It's what you own. It's not necessarily the dollar bill price tag attached to it. See, a lot of people, they talk so much nonsense about the dollar. Oh, the dollar bill doesn't mean anything. The dollar bill is worthless. And then they see the dollar bill valuation attached to the asset that they prefer over the dollar, and they get all bent out of shape about it. Well, if the dollar doesn't matter, why do you care? Now, the dollar matters to me. I do care about the health and well-being of the dollar bill. It's the world reserve currency. Why would I not care about that? Current world reserve currency. I don't have the utmost conviction or confidence in the US dollar, but I care about its health and safety. But you want to know what I care more about? Asset ownership. I don't really care what the price tag is attached to the assets that I own. I care to an extent, but it's not going to increase or decrease my confidence in the asset. Silver and gold, I don't care what the dollar bill spot price is. I care about how many troy ounces I own. S&P 500 or the stocks that I own, I don't really care all that much about what the current share price is doing, because in the short term, there are fluctuations. They do go up and down. Everything goes up and down. I don't care all that much about that. I care far more about how many shares I own. I don't care what the dollar bill price tag is. See, I'll use Apple stock as an example, since I'm using silver and gold as an example. I'll use Apple stock. This right here. Like I said before, like I said in the intro, here, let me just do a reminder. If you download Webull and fund your account, they're going to give you up to 12 free fractional shares just for doing so. And if you tell 3 friends about the app, they're going to give you a spin on the Webull wheel, which guarantees you $300 worth of free Apple stock, with the opportunity of winning all the way up to $3,000 worth of free Apple stock. We will link in the description. Everything is linked in the description. But speaking of Apple stock, while we're talking about Apple stock, let's just say I buy a share of Apple. Right now, I can check the exact price. Apple, as I'm recording the video, is $182.05. If I wanted to buy a share of Apple right now, I would first determine what I want more. What's more important to me? Getting that one share of Apple or having my $182.05? If I want the share more than I want the dollars, then I'll buy the share. The share is more important to me than the current dollar bill price tag. So let's just say I buy a share for $182.05 and, the next day it falls down to, I don't know, maybe $178. Do I care? Would I care? No. Because it's more important to me to have that share than it is for that share to be worth $182.05 at this time. And I wouldn't buy that share if I didn't think the share would be worth significantly more later on down the road. I don't care what's happening today. I don't care what's happening this week, this month. I don't even really care about what's happening this decade, if I'm going to be honest with you. And like I said, I'm using Apple just as an example here. I am not all in on Apple stock. I am all in on broad market index funds, and Apple is a big chunk of the index funds that I choose. But I'm not singling out Apple for any particular reason. I could be using Walmart stock, I could be using Home Depot, it doesn't matter. Just use Apple as an example. Just like I use silver and gold as an example. Just like how I used a single family home as an example while talking about real estate. See, that's what we're talking about here. We're talking about asset ownership and net worth. Would you be able to handle going all in on silver, all in on gold, all in on Apple stock, all in on a single family home or a small apartment building or something, and all of a sudden seeing a 50% crash? Would you be able to handle that? Are you prepared for that? Now, like I said before, I don't believe there's a single person in the world that wouldn't be a little bit fearful during those times. Those are scary times. But if you can push through, and if you are confident enough in the asset that you are acquiring, or assets that you are acquiring, you'll know that it's just part of the process. You'll know and understand that this is to be expected. You'll know and understand that this was bound to happen at some point. Now it's time to climb back up again. I wanted to make this video just for the hypothetical. Something to think about. It's not something that we often think about until it happens. We don't really think about a big crash until we're right in the middle of a big crash. We don't talk about or prepare ourselves for a 10% decline, a 20% decline, potentially all the way up to a 50% decline, until we are seeing a massive decline. Is that something you're prepared for? Is that something that you'd be able to handle? Maybe the answer is yes, maybe the answer is no. But the important thing to remember, especially if you're one of those people that are like, oh, the dollar bill's worthless, the dollar bill's going to zero. If you're one of those people, especially, this goes for everybody, but especially the people who talk like that, the important thing to remember is that the assets that you own are more important than the dollar bill price tag attached to it. Now, unless, of course, you are relying on the dollar bill price tag attached to it because you're planning to, I don't know, maybe like retire within the next 2 to 5 years. I'll use someone that I know as an example. Not going to say who, but he shared some numbers with me. Currently has 850 in his account, and he believes he needs probably just a hair below 1.5 before he's comfortable to retire. $1.5 million, $850,000 currently toward his maybe 1.4 million that he's looking for. Let's just say he hits that 1.3, 1.4, 1.5 and says, okay, I'm confident that I'll be able to retire toward the end of the year. And as we approach the end of the year, that 1.4, 1.5, whatever, dips back down to 1.1. That's a little bit different of a story. But if you are in the midst of the process, if you are in building mode, not near retirement mode, building mode, if you are focused on building, beefing up your net worth, and hopefully diversifying, if you are someone that's in the middle of building right now, if you're someone that's working on building yourself up a portfolio and whatever it is that you're striving for, I really hope that you're diversifying. I hope that you are focused on, well, maybe focused on one asset class, but choosing to diversify with other asset classes as well. It's very important to do that. No matter what your priority is, it's never a good idea to go all in on only one asset class. Bad idea. You should have multiple. You stand a better chance of turning yourself into a financially unbreakable person. But that's the mentality that you have to have. If we were to see a 50% market crash, or a 20% crash, or anything like that, you have to have that financially unbreakable mentality. You have to have thick skin, you have to be confident, and you have to be more confident in the assets that you are investing in or buying or whatever it is that you're doing than anything else. Whatever asset it is that you prefer, because there are a lot of people that watch my videos. Some people are all in on silver and gold, some people are all in on stocks, some people are all in on other things. Some people are all in on their hand in a bag of Doritos and they're just watching Netflix all day. Whatever it is that you're focused on. Because, like I said before, I hate to keep referencing it, but during the crash of 2020, when the spot price of silver got chopped nearly in half, you know, I was the person up until that day, I was always the person saying, oh man, I love the red days, buy the dip, I hope we see a pullback, I hope we see a correction, and I got what I wished for by seeing a massive price cut, but I would be lying if I said there wasn't something in the back of my mind saying, oh my God, geez. It's not a pleasant thing to experience, even if the premiums didn't take off, and even if we were able to get the silver, get the gold for the massive, massive discounted price and actually benefit from it, even if that were the case, that doesn't take away from the fact that this had a terrifying event going on. Oh my God, everything just collapsed. Spot price of silver got chopped nearly in half. Gold got knocked down several $100s per troy ounce. the stock market over the course of that period of time, I was able to get a lot of individual stocks for like 40% off. And I was able to get silver for, yeah, I know the spot price was knocked down almost 50%, but because of the premiums, it kind of leveled things out. And I was able to get a lot of silver for, with the premium attached to it, I was able to get a lot of silver for pretty much what I was getting silver for prior to the crash, thanks to premiums. But even with that being the case, the spot price is higher than it was during that time. So even though I wasn't able to really fully, truly capitalize on the discount because the prices were, or the premiums were bumped up, even though I wasn't fully able to capitalize, still up overall. As for the individual stocks, I got a lot of them for 10, 20, 30, 40% off at the time. And now I'm up 50% on a lot of them, 30% on a lot of them, 100%, 200% on a lot of them, because prices have gone up. So I don't really have the ability to speak from the perspective of someone that's like underwater right now. I got a lot of what I own in the middle of the biggest crash of my generation. And I bought a lot at the bottom of the market. And across the board, I'm up. Every single portfolio I have is in the green, and not just in the green, but very, very noticeably in the green. I won't share exact numbers, but I will share percentages. My main investment portfolio is currently up 25.15%. My secondary investment portfolio is up 22.14%. My Roth IRA is up 6.98%. And as for my 401k and HSA, they're both far too new. I'm not in the red or the green. They were both just opened up within the last like 2 weeks. So they're just there. And as for my silver, and I never really did, I haven't done the math on how much I'm up on gold. So that I can't, I have no idea actually. But as for silver, I made a video not too long ago talking about how I'm up, depending on if you want to factor in the premiums or not, I'm up 15 to 20%, even though spot price is down right now. I'm still up. So I'm up 15% or more on silver, 25% my main portfolio, 24 or 22, whatever percent on my other portfolio, close to 7% on one of my retirement accounts. So I'm up across the board. I can't speak from the reason I say, I'm not saying this to brag, I'm saying this because I can't speak from the perspective. I can't say, oh, hey, yeah, I've been investing for a couple of years now and technically I'm in the red. I'm still trucking along, but I have been there. I have been there. I've been there since the day or the first couple months that I had set foot into this personal finance game. See, I didn't start with stocks. I started with silver. And I started buying in when the spot price was $17 and premiums hardly even existed back then. $1, maybe $1.50 over spot for the most part. I was getting a little bit more silver every month. And coincidentally, every single month that I would acquire more, the spot price was lower than the previous month. I started at $17. Second time around, it was like $16.75. Next time was like $16.25. Then it was like then it was like $15.95. And I remember saying at the time, and you know, some people were complaining about it, I was one of the few people saying, this is fantastic. Every time I buy more, I get a bigger discount. I just got started. Of course, that's a good thing. But I have experienced being in the red. When I first started stacking, my whole first year of stacking, the price was on like a decline. And then it kind of bottomed out around like the $14 an ounce range. And that's when I went heavy on silver. Then it started to climb up. And I'm pretty sure most people know what's gone on since then, because I've only been stacking for about 5 years. I'm not going that far back in history, or about 6 years actually. Stock market, I can say the same thing. I started investing or really just dabbling toward the end of 2019. And I started investing or dabbling during the end or toward the end of 2019. Really wasn't, I wasn't all in. I was just trying to figure out how to understand the stock market. That's all I was doing for my first like 6 months. So a little bit of trial and error. Wasn't investing much at all. I'd buy a share every here and there. I didn't know how to do like proper analysis, fundamental analysis, technical analysis. I didn't know how to interpret an earnings report. I didn't know what a lot of the terminology meant. So that's what my first couple months were spent doing. That's how I invested in the stock market for the first 3 to 6 months. I invested in educating myself on the stock market. And then right as I started getting the hang of it and actually understanding how to make the right picks 9 times out of 10, as long as I can be right more often than wrong, then I'm happy. that was, you know, that was my first couple months. And just as I got to the point where I was like, okay, I'm confident enough to become an investor at this point, that's when we saw the crash. And I was also in college at the time. And due to what was going on during March of 2020, when things were getting shut down, colleges were getting shut down, and tuition was going up for some reason, and we were being told that we had to start, you know, paying for these other things as well, things that we don't even use. So it got to the point where I didn't feel as though it financially made sense to continue at that time. I was like, I'll pick up where I left off at some point in the future, but right now my priority is my family and my financial well-being. So I dropped out temporarily, put the education thing, or the formal education, postponed that, and I took all my tuition dollars. Now, I wouldn't recommend anybody else in the world do this, but what I chose to do at the time was I took my tuition dollars and threw it into the stock market at the bottom. And obviously we had bottomed out. And when you bottom out, you can't go any lower. When you hit the bottom is the bottom. Like, that's, you can't hit the bottom and then fall lower. Like, you hit the bottom and it starts working its way back up. And everything appreciated. All the silver that I aggressively stacked when spot price was $14 an ounce with practically no premiums, all the tuition dollars and my other, and everything that I invested at the very bottom of the massive March of 2020 market crash, everything had appreciated. But everything that had appreciated and had gone down, because I've seen the ups and the downs, one thing remained the same. That was just the on-paper net worth dollar amount. I still owned the same amount of shares. A market crash doesn't mean your shares get taken away from you. A market crash doesn't mean your coins get taken away from you. I still had the same amount of coins. same amount of silver, same amount of weight of silver, same amount of troy ounces of silver and gold, same amount of shares, same size position with broad market index funds, and whether it was a red day or a green day, I owned what I owned. I'm nowhere near retirement. I have decades upon decades to go. Why do I care? Why would I care about what's happening this week, this month, this year? It's irrelevant to me. None of that matters to me. And if we were to see a 50% market crash, and with every single asset that I own, or not every single asset, just because I'm up across the board in my main investment portfolio doesn't mean that there aren't a couple of duds in there. I am red on some of my picks. See, here's the thing. Let's just say I chose 10 individual stocks. Maybe 1 or 2 of the 10 are currently in the red. I'm down on maybe 1 or 2. As for the other 8, let's just say, I'm in the green. And I would say maybe 5 or 6 of the 8 where I'm in the green are crazy in the green. There are some that I'm up triple-digit percents. But if we were to see a crash, and if my gains were to be taken away, would I be able to handle that? Would I be able to weather that storm? I believe yes, because I'm in it for the long term. I believe yes, because I am confident in my investments. I would say yes, because I am focused on one thing and one thing only: long term. I don't care if we fall down 50% this year, because I trust that I will be up far more than 50% 20, 30, 40 years from now. I believe, regardless of what happens in the short term, I do believe I will see an average annual rate of return of about 8% adjusted for inflation when it comes to my broad market index funds. I do believe that I'm going to see a very slow and low appreciation on the precious metals. I don't believe they're going to do anything overly impressive, but I do believe that they will appreciate in value over time. I believe that they will underperform, but I do believe that they will go up. And if and when I am ever in the position, or should I say, when, if is not an option here, when I am in the position to get my hands on real estate, I believe that regardless of housing market crashes and whatnot that I may or may not experience in the short term, I believe it will all make sense in the long term. See, that's just how I see it. It doesn't really matter to me what the on-paper dollar bill price tag is that's attached to the net worth. Sure, of course, I'm focused on beefing up my net worth, but not so much by dollar amount, more so by number of shares, number of troy ounces, and eventually properties. That's just how I see it. This is just mostly like a thinking out loud type of video. It's something that I had wanted to talk about because it's not something that a lot of people even really consider. A lot of people get very, very caught up in bull markets, or even when we're moving sideways. See, sideways isn't, sideways is boring news. When the market's moving sideways, when we're not really going up or down, if we're not seeing any significant red or green, it's like a slow news day, or a slow news week or month or 6 months or whatever. But during a bear market, when we're down 10%, 20% from recent highs, or if we see a crash 10, 20, 30, 40%, 50% in a very short window of time. That wakes people up. Now all of a sudden everybody's on high alert. Oh my God, people are freaking out. People are panic selling. People are panic buying. Panic gets involved. See, a lot of people, see that's the problem. Or not the problem, but that right there is almost like, that's how you crack the code in a way. When you start to understand, oh, okay, all of these different markets, they're not so much made up of or based on numbers, statistics, analytics, world events, this going on, that going on, all these different types of ways of analyzing. It's not based on any of that. It's based on fear and greed. So during times of fear, when people are freaking out, the market goes down for certain reasons. It goes down even more. The downward momentum gets revved up because people start selling. The market's going down whether people are selling or not, but then when more people start selling, then it just, the snowball effect. Well, same thing the other way too. When the market's going up, people get excited, people get greedy, people buy and buy and buy and buy and buy, and it just forces the prices up even more. Well, all the selling and selling and selling and selling forces the prices down even more. The market's going up, the market's going down, but the investors cause it to go up even more or down even more. You just have to understand that in the short term, these things don't truly matter. It's all part of the process. It's to be expected. They tell you that on day one. There will be market fluctuations. You will see the ups, you will see the downs, you will see the highs, you will see the lows. Well, guess what? When you see the lows that you were warned about, you have to be able to weather the storm. Can't panic sell at the bottom of the market and then buy back in when we're up 10%. It's net worth. Do not damage your own net worth due to fear and greed. Focus on what's important to you. Focus on building something up, regardless of the red, regardless of the green. Your number one priority should be to acquire more of what you have. If you have the ability to get some more at a discounted price, fantastic. If you have the ability to get some more when prices are, still up, but it's more important to you to acquire more of whatever it is that you're buying into than it is to just hold on to the dollar bills and hope for a crash, then fantastic as well. Like I said, this video is just more supposed to be a thinking out loud type of video, but it's something that we don't really think about. It's something that we don't really talk about. A lot of people don't know exactly how that they would react during a crash. A lot of people will be like, oh yeah, crash is great, just buy more. Well, a lot of people don't think about what will truly go through your mind when your net worth gets cut in half, or when it appears that you're losing a crazy amount of money on paper. When you actually see the numbers fall, and fall fast, you'll be thinking thoughts that you never expected to be thinking. It is a scary thing to go through, but it is what it is. It's part of the process. So I want you guys to head on down to the comments and let me know anything and everything related to today's video topic. If you were, hypothetically, to see and experience a 50% drop in everything right now, imagine you turned off my video and checked your net worth and it was half as much as it was earlier today or yesterday or something like that. How would you react to all the silver, all of the gold that you own now being quote-unquote worth half as much? Your entire investment portfolio now being quote-unquote worth half as much. your real estate, if you own any, being quote unquote worth half as much. How would you truly respond to that if that's what you saw right now? Head on down to the comments and let me know. If you guys like today's video, please hit that like button, subscribe if you're new, subscribe to my second channel, which is my backup channel for exclusive bonus videos. Get yourself some DYDSS merchandise to help support the channel in the biggest possible way. T-shirts, hoodies, stickers, coffee mugs, and a bunch of different designs, many of which are helping us raise some funds and awareness for different charity organizations. Try out some G Fuel energy formula, $5 off your first order by clicking the link in the description. Sugar-free, low-calorie, packed with a whole bunch of vitamins, over 50 different flavors to choose from. This one is Bahama Mama. It's definitely in my top 3. I recommend it. $5 off, link in the description. And of course, make sure to go and get your up to 12 free fractional shares by downloading Webull and funding your account any amount. Even if you deposit as little as a penny, it still works, it still counts. You still get your up to 12 free fractional shares. And right now they have a promo going on where all you have to do is tell 3 human beings that you know about the Webull app. Just click the little invite button and send it to 3 people. It's that simple. You're guaranteed to win at least $300 worth of free Apple stock, with the chance of winning all the way up to $3,000 worth of free Apple stock, which you can keep and hold on to, or you can sell and use the cash to get something that you'd rather have instead. Webull link in the description. Everything is linked in the description. And I want you guys to head on down to the comments and let me know, once again, what are your thoughts on everything shared in today's video? What are your thoughts on a hypothetical 50% market crash? Massive crash, wipes out all the gains, wipes out all of the on-paper profits, the unrealized profits, completely annihilates the dollar bill valuation attached to the assets that you own, whether it be silver, whether it be gold, whether it be stocks, broad market index funds, real estate, whatever. 50% crash. Whatever asset it is that you are primarily focused on, how would you truly respond to it being chopped in half in the blink of an eye? Head on down to the comments and let me know anything and everything related to today's video topic. Thank you guys so much for watching. See you next time. Don't you dare stop smiling. Peace.